From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for June 27, 2016. I hope you had a great weekend, ready to get started trading for this week. In today's video, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading. I'm going to highlight some of the key levels that we will look for entry and exit opportunities. Of course, relatively speaking, compared to last week's news, this week seems fairly quiet on the news calendar, and I do expect that we'll see some continued uneasiness in the markets this week as we get the week started, carried over from last week's historic news. Let's get started here on the USD CHF, the US dollar versus the Swiss franc. Of course, with last week's news, we saw this currency pair gap higher, and even over the weekend gapping higher again as it pressures back up towards the 9,800 level. Not quite all the way there right now, but very close to the 9,800 level. 97.85 caps out our resistance zone at the current moment. The yellow shaded area right smack in the middle of the chart. You can see it right here. Follow it back in time, you can see this black box here, there was resistance, this green circle here, resistance, black box here, resistance. Even over here, the bottom of this larger green circle, we found support at the yellow shaded area, just underneath the 9,800 level. The red box over here on the far left-hand side of the chart, top of that red box is that same yellow shaded area between 97.50 and 97.85. Clearly, that was resistance. So this is a historical factual area of resistance in the market, and of course currently it is finding that as well. If we can break above there, all we have to do is look back along that yellow shaded area. If the market gets above that yellow zone, it likely goes up to the purple zone. We saw it back here just to the left of the red box, just to the right of the red box, here in the larger green circle. We know that that purple shaded area becomes the area as our next resistance. That's 98.85 or so at the top of the downward falling channel as well, into that purple shaded area. So let's zoom in now that we know all that history of these levels. Let's zoom in, and again here we see the 100 period moving average as well, sitting here just right around the yellow shaded area. So currently we know that the yellow zone is acting as resistance. That's between 97.53 and 97.85. It's challenging it now, but we know that that's resistance. If we could see the market push through there, break above the 97.85 level, the yellow shaded area, not too hard to see. That will expected to go up to the purple zone into the 98.65 to 85 level. If it stays under the yellow zone, we already know our support is closer here towards the blue shaded area. You just have to look back here to the left a little bit to see that. So we know our three areas: blue, yellow, and purple. So when do we buy it? If we're going to buy it, we need to buy it in two particular outcomes. It either needs to go back down to support, which would be the blue zone, or break above the yellow zone. And hasn't done either one of those things yet at the beginning of the week. So again, one of those two things needs to happen before we look for a long opportunity. Take it down to the 4-hour time frame. You can see, of course, since Thursday and Friday, the congestion around that yellow zone. We just really need a breakout above that yellow shaded area before we can have confidence in going long again. Now, if you're holding longs from the blue zone where it dipped back down into the 96.90 level, then of course I would say you're in profit protection mode and continue to protect profit, especially if we break through 97.85 today for the U.S. franc. Moving on over to the euro dollar, EUR/USD, just the opposite, of course. We see the gap lower, of course, as it pressures back down into or just underneath a 1.1 level. 1.1 thousand is the blue shaded area that you see down here at the bottom of the chart. We're underneath that right now. So if we're going to see continued pressure lower, we need it to stay underneath that 1.1 thousand level, the blue shaded area, targeting, at least right now, into the low 109s. 109.50 to 109.30 is the orange shaded area that you see right here. Well, as we get down here into this orange zone and deeper into some of these other levels, you can see back here the congestion where the black box is. Let me zoom out one time. See the black box and that congestion back here? Well, we're coming into that area. So there's likely between 108 and 109.50, that entire area, and I'll move these shaded areas over later today, but this entire area proves to be a pretty tough spot for this currency pair to get through, the euro dollar. It'll need to likely break through 1.0800 before this becomes a significant fall for the euro dollar. Take it down to the 4-hour time frame. Again, not too different than the franc, just the opposite. If we're going to go short, we need to go up to resistance first. Well, it's already found some resistance at the green shaded area this week so far, falling under the blue zone, staying under the blue zone. We target the orange zone. So if we're going to go short, it needs to go up first or break through one of these support levels before we go short. There's absolutely no reason to go long at the current moment for the euro dollar. Of course, over here, GBP USD reaching into historic lows. I have it all the way out here on the monthly chart because we're looking all the way back into 2006, 2007. But even if we were to squeeze it out a little bit further, you're going back into 1995, 96. We're at historic lows. There's no question about that, and I don't think anybody would question that. So here's the problem. I have a very difficult time going short. Even though there's an expectancy of going short, I have a difficult time going short at the bottom, at the lowest point of the trend. So I can't really recommend selling this currency pair at the current moment. But what we can do is go down to the daily time frame, and we know that even on the gap lower, we saw a little congestion right around the 33.50 to 34.20 level, the pink shaded area at the very bottom. So if we have any inclination or any lower risk, higher reward opportunity to go short, it has to go back up into that resistance level. So that's the next thing you're looking for. It needs to go up before it goes down, give you lower risk and higher reward. 4-hour time frame, you can see that little period of congestion there, even on the weekend gap. So again, if we're going to have any inclination to go short, it has to go up before it goes down into the mid 133s before that becomes an opportunity. Going short at the bottom just never seems like a good idea for me. And of course, that pink shaded area may be the spot of any sort of retracement from last week's move. It would likely have to get above 134 before that would happen. So at least at this point, if you're going to speculate on going short, you have to place a pretty high stop loss on this currency pair. So I'd be hard pressed to recommend going short at the current moment. Take it over here to the USD CAD. We have seen a rise out of this currency pair since the Brexit news. We've seen a rise challenging the 100 period simple moving average actually here on the daily time frame, right around the 1.3060 or so level. If we begin to zoom it in here on the daily time frame, a couple of different things to think about. We have seen a rise of the lows. Look at that red trend line here. 1, 2, 3 lows getting higher, but we also see a fall of the highs. If I just take another trend line and put it up here, you see the fall of the highs. So it's challenging resistance, but hasn't clearly broken through it. Purple zone between 1.3080, 3060 will be a very interesting level for the day today. As current resistance, if it breaks above there, we'll look for the continuation at least back up here towards this yellow shaded area. Let me see if I can pull this yellow shaded area over a little bit more. That becomes resistance. That's into the 1.3130, 3165 level. That's your next resistance. So if we're going to buy it, it has to break through the current resistance, 3080. But I think even a better idea to buy it would be back down here towards the blue zone into the 3,000 level. And of course, back underneath 3,000, we could see even a reversal once again for this pair back down into the 2800s, the orange shaded area. So some interesting things there. Of course, we'll watch oil. Oil pressuring lower and pressuring support. Take a look at this. This is the U.S. oil chart here on the daily time frame. Challenging support lows. See that purple shaded area there? 47.45, 47 or 46.30, the purple shaded area. If it breaks that support, we could look for it to go lower. Take a look at the UK oil chart. Similar situation, rising trend, blue shaded area, 48.39, 47.73. If it gets underneath there, we could look for that to continue to pressure lower too. What does that mean for the US CAD? Well, often falling oil prices is not great news, and we'll look for the US CAD to pressure back up again. 4-hour time frame. If we're going to go long here on the US CAD, dipping into support, it's already been there today. The risk, of course, is the break of the blue zone. Again, at this point, the next thing we would have to look for is the break above 1.3080 if we're going to see it continue to pressure higher for the US CAD. Moving on over to the US yen. It's bearish, of course, clearly at this current moment. It is bearish. We did see a pretty strong pullback, but now gapping a little bit lower from the weekend. Again, we're into historic lows. If I take it out here to the, well, let's go all the way out to the monthly time frame. You look back here where the blue box is. We're looking back in 2013 and 14 where that blue box in the middle of the chart is. It would need to break We'll call it 100.0, but I think it's a little bit lower than that. 100.0 needs to be broken if it's going to go lower than that. But at least at this point, the blue box, that area of support, is holding for the US yen. Let's take it back down to the daily. There is that 100.60 or so level, bottom of the blue shaded area, dipping into the 98s at the lowest low last week. 4-hour time frame. If you're going to go short, of course, you need it to break support. At this point, finding support right around 101.55, this little pink shaded area, but it's not too far down here into the 100.0 level, where the blue shaded area, or actually into the mid 100s, inside the blue shaded area. So I think you need to wait for an opportunity to go short underneath 101.50. Let's take it down to, well, we're on the 4-hour time frame. Zoom it in a little bit here on the 4-hour time frame. 101.55 is your support. A break of that goes lower. Staying above 101.55 as at the current moment, 1, 2, 3, 4 4-hour candles bouncing around between the pink zone and the yellow zone, which is 102.20, 102.40. So quite an interesting currency pair. I'm not really ready to call any trades on this currency pair at the current moment. Move it over to the AUD-USD, of course, gapping lower as well here on the AUD-USD. Again, just kind of referencing back to those charts, those oil charts that we just looked at, pressuring support on both of those prices, the U.S. oil chart and the U.K. oil chart. Both of the prices, if they break the support and oil starts to plummet and go lower, that actually sends the AUD-USD lower as well. There's direct correlation between oil and the AUD-USD, inverse correlation between oil and the USD-CAD. So anyways, if oil goes down, we expect the AUD to go down as well. So in this case, we would look for a breakdown of support. Currently, if we zoom in here on the daily, we can see this blue shaded area, 74.10 down to 73.80, holding as our support. It will need to break underneath that blue zone if we're going to see it challenge the purple zone again, which is down here closer towards the 73.30, 7300 level. If it holds and we see oil start to rally again, we look for a push back above 7400 and targeting back into 7470, 7500, which is the orange shaded area. Let's take it down to the 4-hour time frame. Nothing really changing here on the 4-hour. You could say see the similar scenarios here. A breakdown of the blue zone continues lower, and of course I think that would take a break of oil prices lower as well. Holding the blue zone, maybe a bounce back to the orange zone, but I think clearly we're pressuring bearish here for the Australian dollar at the current moment. So watch for opportunities on breaks of support or rallies into resistance to go short here for the Australian dollar. Similar situation over here on the NZD USD, New Zealand US dollar. Continue to watch oil prices as well. Interesting area right around the 7,045 to 7,075 level. That's the purple shaded area. Let me put 2 arrows on here. Purple zone is support right now. So a break of that goes lower. So holding above it, we bounce back up again as a possible opportunity. Look back here where these 2 green circles are. You see that resistance. So that's a known area of support right now because of those historical areas of resistance right around 7,050. Let's take it down to the 4-hour time frame, not the 1-hour. 4-hour time frame. There's proof of support there at the purple shaded area, 7,075.45. Again, a breakdown. Let me zoom it in one time here. A breakdown of the purple shaded area underneath 7,050. We look for the turn lower back down towards the orange shaded area. If it continues to hold as support here today and we see any rallies, we look for it back up to the blue zone. But at least at this point, I think we're clearly bearish and we're likely waiting for the breakdown of 7,050 for the continuation lower for the New Zealand dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.